I've been highly tuned in, looking for signals that the housing market is slowing. By now, everyone knows that unsold inventory of homes on the market is climbing. But is that unsold inventory surging? Is it getting to unsustainable levels? Are home prices dropping? As the economy stays surprisingly strong, mortgage rates have stayed higher for longer than anyone expected. That keeps home buyers on the sidelines. And because home prices are high, affordability is low, it is legitimate, it's always legitimate to fear a potential real estate market crash. Lots of people make that assumption. And from my perspective, I always want to know if it's actually happening. So we're always on the lookout for those signs in the data. Inventory is up 1.5% this week, and we'll explore if that pace of sellers is accelerating or if it's plateaued. Home prices are holding steady for now, and we'll examine the data for signals if home prices might turn down from here. You might be surprised at what we find. By the way, this week, Thursday, June 20th at 10 a.m. Pacific is our monthly webinar. We're going to spend extra time this month examining the national and local impacts of rising inventory. Some states have dramatically more homes on the market now than last year, and even more homes for sale than the pre-pandemic years. Some states have just a few more homes on the market now. So some places we can see increased supply has already put downward pressure on home prices. So we'll spend the whole hour looking at all those details. These webinars are limited to 1,000 attendees, and we get way more than that who want to join us each month. So you can still reserve your spot for this Thursday, June 20th at 10 a.m. Pacific. In the description below, there's a link to register for that Altos webinar. Click that to save your spot and join us on Thursday. You know that at Altos Research, we track all the home prices, all the supply and demand, all the changes in that data every week so you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market for mid-June 2024. There are now 621,000 single-family homes unsold on the market around the U.S. That's an increase of 1.5% from last week, and it's 38%, almost 38% greater than last year at this time. But in the last few weeks, inventory is actually no longer growing compared to last year. So I've mentioned before that we could see 40% inventory growth over 2023 sometime this summer. We're almost there, but that relative level is actually compressed for 2 weeks in a row now. So for 31 weeks, inventory expanded compared to the year prior. Now it looks like that trend has plateaued. It was last July when mortgage rates climbed over 7%, and they haven't really come down yet. And so now we can see the annual comparisons start to plateau. So higher rates lead to more inventory, and we're just about to cross that threshold where rates are no longer higher than they were a year ago. If the 30-year fixed mortgage rate ticks down into the sixes over the next few weeks, we could continue to see inventory growth compress. You can see that chart, that trend here in this chart. So current unsold inventory levels, single family homes is 621,000. That's the dark red line. See how it has been expanding, the gap from last year. In the last 2 weeks though, that expansion has stopped, a little plateau. The inventory difference from last year peaked 2 weeks ago at 39% more homes on the market than in 2023. Right now it's actually 37.6% greater than last year, so it's coming down just a little bit. It's a subtle change. But it means that growth isn't accelerating. Inventory growth isn't accelerating. Supply is not running away from demand. So even as inventory is greater than it was a year ago, it was climbing climbing faster in each of the last 2 years in mid-June. So chalk up one count for signs of stabilization in the residential real estate market. Isn't that surprising? So on to new listings. There were 71,000 new single-family home listings unsold this week, with another 16,000 new listings that were immediate sales. So that's a total of 87,000 sellers. So 87,000 total new listings isn't bad. It's not great though. Like if you have only 87,000 sellers, it's impossible to grow total sales to a 5 million annual pace. There just aren't enough homes for sale. There are about 9% more sellers each week than last year, so that's good at least. That growth has come down from earlier in the year. This is another indicator that inventory growth is losing some momentum. So if you're betting on a crash, you're like expecting a big flood of inventory coming, or even an acceleration of inventory. I don't see it in the data now. There are notably fewer immediate sales than last year at this time. Demand is not picking up even as supply, slows down. So the immediate sales, remember, are those homes that get listed and take offers and go into contract within a few days of listing. These are the best properties, well priced at the best locations. There are always some immediate sales in any market, and we can gauge levels of homebuyer demand by how many immediate sales are happening. In the hot markets, we watch 30% of those new listings get snapped up immediately. Right now, it's like 1 in 7 homes get sold immediately. So in this new listings chart, the dark red line is this year, and it shows how we continue to have a few more sellers than last year. Last year is the bright red line. So more sellers each week than a year ago. Look at this point in 2022, though. That's the light red line. At that time, the last of the pandemic sellers were still trying to sneak out while mortgage rates were rapidly rising. There were 115,000 sellers mid-June in 2022. Now there's only 87,000. So it's hard to get runaway inventory growth when so few homeowners are interested in selling. There were 69,000 new contracts for home sales this week. That's just a few percent more than last year at this time. 69,000 is 2% more than last week. So not cratering, but not really showing any growth either in home sales. There are 396,000 single-family homes in contract. That's a couple percent more than last year. It's a smidge up from last week. Any sales volume growth we saw earlier in the year has really gone. The market is still 15% smaller than it was 2 years ago. And in fact, what's notable in this chart of the weekly sales volume is that you can see the light red line from June 22 peaked right at this moment that year. And then sales volume really cratered in the second half of the year 2022. Each line here is a year with a weekly sales volume. These are the homes that were on the market. They took offers and they went into the contract pending stage. So these are newly pending each week. 2022 loaded all the sales in Q1, Q2, but by Q3, everyone knew they had missed the windows, and so sales slowed way down. So we're over 2 years now into the era of higher mortgage rates. And if we're lucky, the second half of 24, we'll see maybe some Fed rate cuts, perhaps some slightly declining mortgage rates, and that would be the opposite pattern of the last 2 years. So if we get that, expect to see relatively better sales volume in late summer this year. In this chart, we'd see the dark red line start printing above the previous years. Declining mortgage rates are not guaranteed, of course. Rates could go up from here. And home buyers are very sensitive to the cost of money. So if mortgage rates climb again, like to say 7.5 or 8 like they did last year, you'll see these sales numbers drop very abruptly like they did in June, July of 22, and again in September, October of 22. You could see that again. When we look at prices, the price of the homes selling each week, we can also see the abrupt change that happened in late 22. So prices dropped in June of 22 and prices dropped again in October of 22. And you can see it in the light red line here. Right now, the median price of homes going into contract is just a hair under $399,000. Home prices have been at roughly this level for a couple months. Prices are now 3.7% above last year at this time. I'd expect this measure of home prices to stay right around 400,000 until later in July before receding for the fall. The median price of all the homes on the market is $455,400 right now. That's basically unchanged from last week. If you walk into the housing market today in the US, you'll see the homes are priced essentially unchanged from last year at this time, and in fact, 1% cheaper than they were mid-June 2022. So the price point where people are buying is up just a fraction from last year, but the overall market is basically unchanged for 2 years in a row, price-wise. It is hard to see any real home price appreciation in the data for the year. It's also notable that while home prices look flat, they're not cratering. So there's no sign in the data of a major price correction, just flat, no growth. So we'll close today looking at the leading indicator of the future home sales prices. That's the percent of homes on the market have taken price cut from their original list price. It's now 36.4% of the market. That's up 70 basis points from last week. It's 500 basis points more than a year ago. So 31.4% a year ago, 36.4% now. Like the other leading indicators I've been reviewing today, price reductions shows very slow demand. It shows flat at best for future home sales prices. Remember that it was last July when mortgage rates climbed over 7% for the first time. So it was the second half of the year when demand slowed the most and price reductions accelerated last year. That this year, that rate pressure came in the first half of the year. So in fact, in this chart of price reductions, you can see that lift in September of each of the last 2 years. Each line here is a year, and in September last year and in 2022, that's when mortgage rates spiked to their highest level of the year, over 8% last year. When rates spike like that, buyers stop, inventory grows, sellers have to cut their prices. And you can see that very clearly in the data here. So this year, as mortgage rates have stayed stubbornly high, price reductions have been growing each week. We're on our way to 40% of the market with price cuts. That's notably slow. And it's why we continue to expect slowing home price appreciation for the second half of 2024. You can already see it by the buyers who are hanging back right now. Add it all together for the week. Unsold inventory is up, but growth of that inventory appears to have plateaued. New listings aren't great, so that implies that future inventory growth is capped. As long as mortgage rates stay elevated, the signals are for home prices to end the year flat with little or no home price appreciation over 2023. There's nothing in the data yet that looks like prices dragging notably lower across the country, though. And that's why we do this data work each week. Home buyers are obviously sensitive to the cost of money, and mortgage rates have stayed higher for longer than anyone anticipated this year. They haven't come down yet. So what if they do? Well, if you aren't watching the data each week, you're probably behind the curve. You have buyers and sellers who have no idea how this market is changing right now. They need to hear the data from you. You should join us at Altos. Go to altosresearch.com, book a free consult with our team. We'll help you learn how to talk about the data, about your local market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.